So just related to IETA, and so we're all clear about my community. I've now been with IETA for they're coming out of consulting, energy, climate, consulting with ICF for a number of years, including with many government and corporate clients around the world. I joined IETA back in 2010. So I've actually been involved in this space deeply for the last decade, and I am now managing director globally. A lot of that work, though, as you can imagine, is across the Americas, just given my location. I'm based in Toronto. And we also have offices in Brussels, which is quite active, as you can imagine, with our European community and how mature the European emissions trading system is, and also on the Asia side. So we have an office, our newer office in Beijing. So that's all China all the time, related to markets on that side. We also, I think it's really important to make it clear that we are business, again, it's over 20 years now, came out of the UN process, and we are a multi-sector community, right? So we represent a lot of heavier industry, power, manufacturing, oil and gas, those that are facing greenhouse gas regulation, legislation, or the inevitability that it's coming, right, and want to be involved in that process, both on understanding the risks, policy design, but also the market opportunities. But also financials, right? So these are investors, these are traders, they're brokers, they're smaller boutique investment firms, and assurance providers. Also a lot of the standards. I think some people don't recognize we represent a lot of the greenhouse gas standards. So verified, now called BERA, CAR, ACR. So you have a lot of those standards that are part of our community, and registries and infrastructure. All right, so as you can imagine, representing that group of business stakeholders at all levels of government, UN level, regional blocks like the EU, national, subnational, state, and provincial level, where we're working with a whole bunch of other stakeholders and partners, and engaging in these capitals to help actually inform, design, implement these policies and market instruments that work and that are durable over time. It can be hard to land on, positions that get broad support from all of our community, right? There's a lot of different interests around that table. So coming here today, I think it's just really important that the message in what we're communicating around our experience to date on these market tools, then what the rationale is, how to potentially design them, and the benefits of those, and how they could actually be uniquely tailored, right, to that group over time. It's all with we want these markets to work. They have to be underpinned by environmental integrity, right, and the climate goal, and that we need to actually see these markets, domestic and international, if we want to even come close to actually reaching the certainly current climate goals, let alone the broader mid-century net zero targets, which again we'll get into in a moment. Okay, so we are in the homeland of the BC carbon tax, right? So obviously know your audience and know the actual region that you're talking to, and I know that this community has been thinking about, well, how does the current BC carbon tax possibly, how does it differ, the similarities, with the trading, flexible, markets that we're engaged with on a regular basis. Also, what are some of those similarities, or how could there be some kind of complementarity or transition over time? So again, we're all very clear around that whole space on the putting a price on carbon. They both put a price on carbon, right? This is a polluter pays principle. That's what drives both approaches. Producers, consumers, they're internalizing part of the social cost of those emissions, right? Helping to make the low carbon alternatives more attractive, right? Changing behavior, supporting low carbon investments, right? They can both be cost effective. Obviously, devil in details, right? And low carbon actions, they're not prescribed, right? Unlike command and control. Individuals and firms deciding how best to respond to that price. And across the economy, both tax and ETS can achieve more reductions at lower cost. They can both generate revenue. And that tax can be designed, or more, I guess, in the BC context, modified to actually raise the public revenue or go into mitigation resilience activities. ETS through these auctions, so ETS is emissions trading. Through auctions or fund compliance, those options can generate revenue to government. Ask Alberta, California, Quebec. These are billions of dollars, right, that are coming in through these trading programs. So then, the revenue comes in. How then it's used, it's up to governments, and hopefully with input from key stakeholders, including folks like First Nations communities, businesses, and households. Revenues can support climate measures, again, low carbon transition. I did not tackle all differences, okay? We're just the takeaways. What are all the similarities? How do they differ though, right? And this is the big takeaway. Quantity certainty versus price certainty. This will not come as a surprise to many of you, but the ETS, these emissions trading systems, they're driven by the greenhouse gas data. In order to actually design any of them, first order of business is getting that greenhouse gas monitoring, reporting data in order to then decide what these other core design components to the program looks like. And it's all about measurable climate results, right? It's the outcomes. It's the greenhouse gas reductions. Carbon markets drive that price signal, right? We don't know then what the price might be though, but we know what that environmental result will be. Tax provides the price certainty. You know what the price is. And we all, again in BC and other jurisdictions, that price certainty is also beneficial, right? To know and plan and invest. But the resulting mitigation is not there. You don't really know what that ultimate climate result will be at whatever price, be it $10 a ton, $50 a ton, $80 a ton. You just don't know exactly. Simplicity versus flexibility. And this is where parts can be argued. It's also a big part of our space evolving very quickly over time, where it's not a black and white world anymore, right? Cap and trade, emissions trading, and tax over here. There's a lot of blending with both. You can now see empirical evidence with a lot of carbon taxes that are now designed in many ways to be like a trading program with flexibilities. And also, you can design a lot of trading programs that have a lot of intervention that makes it more look like a tax, right? But a tax, again, bigger, higher level takeaway, typically easier to implement, right? You just bake it into using the existing tax system. It can avoid these hefty startup costs, the infrastructure required. Also, entities, both business and government, scaling the curve of designing, operationalizing these markets, it can be quite new, right? And it can take time. The ETS, the flexibilities though, which again, certainly my community all embrace and want to and continue to advocate for, matters. And this is, allowing for the trading, banking, borrowing. There's a lot of types of these flexible compliance options that you can use with the trading system that are really quite attractive for reasons we'll talk about later, and not just me, but many around the room. And allowing for linking, harmonization, alignment. So it's not about going it alone, right? It is about having these foundational carbon pricing market trading components that can more easily facilitate harmonization and possible linkage across these other jurisdictions, okay? Broadens the tent to new solutions providers. This is really important, and to have some of, again, folks around this room who have been in the trenches around some of these really incredibly beautiful, dare I say, both climate benefit and co-benefit projects, is a training program can actually broaden that tent to farmers, foresters, First Nations communities, entrepreneurs, these innovators. There's a brand new revenue stream that's coming into their communities. And so that provides a real critical benefit and differentiator in the training programs that we've been involved with to date. All right, so some of the core, again, takeaways for our purposes today on the markets piece: achieving those measurable climate results, that is what drives it, and let the economy decide, the price. Proven effective policy choice. Again, we'll talk about those experiences both in Canada and global. ability to respond to macroeconomic fluctuations, changes that many can't even anticipate, right? Able to address competitiveness concerns, we'll talk about that. The profit incentive power piece, new revenue, new players, sparks innovation, global response to a global challenge, spreading worldwide. So, how the ETS works. Simple version, all capital letters, brackets, because now I'm looking at about 2 minutes. And you know that there's everything. I'm looking at Alex right now and Chanda. The follow-up with other material to dig into any of these insights will be provided so you can post it on your portal, right? Your stakeholders also know they can contact me or any other people in this room that have come here thanks to me. So how does an ETS work in the most simple way? Government decides, trading scope, right? We're talking sector, facility, gas, decides the point of obligation, mid, up, downstream, who has the compliance obligation, and also the thresholds, I should say. Imposes absolute, like a cap and trade system. The intensity or EPS, emission performance standard, right? Targets limits. Government issues tradable permits. These tradable permits, again, you'll hear a lot of different names, acronyms going ahead around the different assets, carbon asset classes, and what they, EPCs or AAUs or CCAs, all right? But they're tradable permits for compliance. They're underpinned by that denominated in tons of CO2, right? Tons of CO2. Government distributes these permits, allocates freely or by auction, right? Entities surrender compliance units for every ton of carbon dioxide they're accountable for, and depending on what they're accountable for. And those compliance terms can be annual compliance periods, they can be 3-year compliance periods or 4-year. Participants can hold, here's the flexibility, right? They can hold, sell, bank permits for future use. Entities requiring additional permits, right? Let's say economics, they don't have enough permits that they've been given freely, right? Or they need to go to market. They need to buy on market in order to comply. They can do so. Entities can use eligible offsets. It's the one area where, certainly in my community, the more offsets, the better. If they are real, measurable, verifiable reductions, greenhouse gas reductions, removals, right? The more the merrier. We don't like usage limits, offset usage limits. We don't like geographic constraints. We don't like quantitative or qualitative constraints on these offsets. We want the more, the better. We need them, okay? And to be clear with offsets, they're just a transition tool, right? This isn't about needing offsets forever, but they're critical to transition. Carbon, here's my bubble. Carbon becomes a commodity, tracked, and traded like any other commodity. And I think sometimes that is lost, that carbon is it is unique in some ways, for sure. Government is ultimately deciding the demand side and the supply side in many cases. But it's a lot like, coal, soybeans, right? Pulp. This is a commodity like any other, and business can manage that very, very well, like other commodities it manages on a daily basis. Okay. ETS design, again, basics. This comes from ICAP, International Carbon Action Partnership. It is one of the best portals that you'll have. It's a government-only coalition of subnational and national governments that are moving ahead, developed or developing emissions trading systems, mostly cap and trade. And they have an incredible online library of all the latest. And because it's from, and excuse any governments in the room or on the phone, from the horse's mouths, when you have these updated bulletins of exactly what is happening in Korea or China or Chile or Quebec, right? It's fantastic to have that at your fingertips, okay? And they have updated bulletins, I think quarterly, for what's going on around their programs. They also have a brand new dashboard, and it's a carbon pricing dashboard that reflects the various prices around their carbon markets globally.
Can you give us the name of that again? It's just cut off at the top.
It's actually down at the bottom, but you can rarely see it. So ICAP, International Carbon Action Partnership. And if you could make a note, Alex and Chanda, I'll do the same, that I'll send you the link, okay? And the other one would actually be the World Bank Partnership for Market Readiness. Those two are, we consider them the gospels of the carbon pricing resources available. So this just provides, again, on the cap and trade type, you have set the scope, what's the cap, what's the target, allocation, offsets, flexibilities, market stability, oversight, stakeholder linking, implement. Next slide. Then you have hybrid approaches, and this is where Simon and Jackie at ECCC, the federal government, will get into the federal system in a bit more detail, right? You obviously have it's hybrid in that you have a levy, a tax on fuel production and distribution. You have a trading system, though, for the large emitters under some jurisdictions in this country. These are we call them the backstop jurisdictions, like Ontario and Manitoba. And so there is a trading system available to these heavier entities, facilities, that are emissions intensive and trade exposed, with the provision for an opt-in. So if you have these smaller companies that also can defend that they have some emissions intensive, mostly trade exposure concerns between the 10,000 ton a year and the 50,000 ton a year, then they can opt into the trading system federally, okay? But it's different than a cap and trade system where there's a performance standard set, facility and product level, and the carbon price is there on the portion of emissions above that limit. I am going to, that's high level. When we talk to ECCC and Ben Evans, we can get into some of the other components to that. But just so you know, so as of this year, you have, again, over 300 now facilities in Canada are registered entities under this federal trading program, okay?
And Katie, do you have to be registered to be eligible
Yes.
for the EITE treatment then?
You have to have gone through the process with an actual, there has to be a product facility performance standard that has been set, and you have to actually have gone through the process then to register on, I was going to say online and with the ECCC. Yeah, and there's a process involved. And you have to be in one of the backstop jurisdictions. So actually this is, I just talked about it, where the only thing where you have in the federal system, it's annual compliance obligations, right? And also these flexible compliance pathways. Jackie will talk more about it. So they can surrender these surplus credits. They can surrender offset credits, which is under development right now. I will say this bubble here, the world is watching Canada. And it's watching Canada because of this unique approach that it's taking federally around the carbon pricing system. But it's also watching because of the bottom-up provincial, especially with the existing provincial programs, and the top-down, the federal program, and how these work together, hopefully harmoniously. All right, so how are we doing for time? Yeah. Now we're going to talk quickly about the evolution of, and did you remember some of my maps? I'm a bit notorious for the maps. But how quickly the world is moving on carbon pricing, and in particular on the markets. So 2007, we go back and you have the EU, right? And driven by Kyoto. So this was 2 years after Kyoto came into effect. And the EU emissions trading system was online, right? With also, a couple of the carbon taxes in Europe that had cropped up. Alberta, the green dot, the oldest compliance emissions trading system in North America. That It was lonely back then. Lots of learnings, though, from Alberta. And then you fast forward 2 years, 2009, you have RGGI, so that's the Regional Greenhouse Gas Initiative. That covers power only in the Northeast, US, right? And then blue, the BC carbon tax, right? That came into play. Then 2013, that's when California, cap and trade, Quebec, cap and trade, they popped into the scene. It was 2014, a year later, that they linked their markets. Okay, so the cross-border linkage. That's now. Actually, that's even dated a little bit. So this is, again, carbon pricing broad. So it's pure carbon tax. It is pure cap and trade. It is performance standard, trading. It is BC, or it's offsets that are baked into tax, like South Africa and Colombia. You can use offsets to comply with the tax. Right? So it's a whole buffet or rainbow of carbon pricing systems that are all around the world right now. This is the, and I think I said it before, the more, I guess, frenetic, fun, animated IETA map, KE map of all the carbon markets. So this is where it's not about a pure, carbon tax, right, without any trading or flexibilities. These are all just the existing carbon markets, so programs that are happening or where they're under development right now. So you can see why our community is quite busy these days, okay? And I will highlight that little plane, Corsia, is a really important one to watch because this is the first of its kind global sectoral carbon market program. It's an offsetting program. And it's under development, well, right now, 2021 launch. And it's to help the global aviation sector reach net zero growth. And so this program, the offsetting program, will form a key component to that, where airlines have to purchase offsets. So this is my last slide. And then I'm going to tee up Alistair and Paul. Busy, shifting, it's happening fast, right? Carbon market landscape, both across Canada and globally. And we're witnessing such a surge in these markets that the dawn of the 2020s. We're calling it the roaring 2020s. But as I said earlier, environmental integrity is absolutely critical to all this. No funny stuff. If there's any question marks related to the actual environmental outcomes, the results, that there's possible double counting or hot air in these markets, then businesses, investors won't play ball, right? Stakeholders, communities will question it. There's just no upside to that. So the environmental integrity piece is vital, and that's the MRV discussion later will be important. Clarity, stability. Probably the biggest challenge that we've had is not about modifications. The nice thing about a lot of these markets is that there's an elegance to that. You can modify them, right, and alter depending on what that broader macro trend looks like. Unlike some other policy options that are more concrete, harder to switch, right? But stroke of pen risk, regulatory, will that program be around anymore because of an election, right? Will that unit have value, compliance, or financial value tomorrow? I mean, that's what's killer, as you can imagine, what we have unfortunately experienced in places like, Ontario, right? Australia. I know. I'm looking. Yeah. We can talk about that later. So that's the killer piece: is the policy certainty, that stability. The time really is now. I will say these things are happening, but there's still a lot of appetite and hunger for innovation around what these markets could look like and what these partnerships and linking and these products. This is a really, I think, exciting time to be involved and to hopefully help to inform that. And this also includes the broader discussions around the Article 6 piece, Paris Agreement, markets provisions, right? Net zero. My final piece here is just that, again, not a day, literally not a day is going by and you aren't seeing new net zero, net negative carbon neutral commitments out of states, provinces, countries, businesses, right? You cannot really talk seriously about robust, defensible plans that are net zero, net negative, without talking markets, all right, and without talking removals. Removals at scale, and I'm talking geosequestration and biosequestration. All right, so that is my stage setter. That you will not hear any more like longish soliloquy monologue by me for the rest of the day.